guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Welcome, guys. Thank you for joining Stock Sniper Trading. My name is Ron. My partner is Dave. It is Friday, January 24th, and it's just after 12 p.m. Eastern, noon. And thank you guys for joining. Sorry I was late this morning. I was running errands. I just got into my home just about 10 minutes ago. Had time to make a coffee and just ready to go. So I appreciate you guys all joining. Today's session, what we're going to do is just talk about the stock markets in general, kind of wrap up what we've done this entire week so far, because Monday, Tuesday, Wednesday, Thursday, we were concentrating on the stock market, and I'd like to just recap that. Also, answer any questions that you guys may have to finish off this week, because I know, and myself, I do a lot of review on the weekends, and I know you guys do too. So it's a good time to maybe wrap up this week by answering questions. Make sure that we don't leave you going into the weekend where you're unsure of anything. So, and the main thing is, today's call, what we're going to do as well is, I got a lot of messages, like overwhelmed with messages this week. It was basically everyone asking the same thing. Ron, where do I get started? The stock market looks really interesting. I'm fascinated by it. How do I get started? So what we'll do as a group together, interactive, is we will list the brokers and platforms, and then it's on your job after that to figure out which one is best and suitable for you, which one you are most comfortable with. And I cannot stress this enough, guys. Open up demo accounts with all of them and pretend like they're live accounts and see which one is the best available option for you. And also, it all depends on where you live around the world. So for us in Canada, we've got some that in the US they don't have. In the US, there's options that you guys have that we don't have. And if you're in Europe, and if you're in Asia, and if you're in Africa, there's options available for you guys as well. So we have to figure out, just let's make a list, and then after that we can start to get into that. Okay, so that's going to be mainly today's session. Unfortunately, we're not going to do any live trading, but we'll do live analysis of the markets, Q&A, and breaking down the platforms and brokers. But who knows, if I'm on a chart and I see a trade, you never know, I might go in. But markets are pretty choppy from what I've seen this morning. Could be consolidating. It's a Friday. Also, options are expiring, so that's another thing. Sometimes when Fridays there's options that are expiring, sometimes they burn premiums and they keep them in a range in order to destroy like the calls and the put options that are above and below and things like that, and to cause the expiration and the time decay and loss of value of the option. So but that's when we get more into the option market. You guys will know a little bit more about that. Okay, so how's everybody doing? Thank you everyone for joining. We don't have the biggest group because not a lot of traders are interested in the stock market, believe it or not. Everyone is just all about Forex, futures, and crypto. The stock market, in my opinion, is the one that is the quiet one. It's the silent one. It's the one that you can do really well in if you really do research. Okay, and if you're into researching companies, following these things, then stock market might be a suitable option for you, because it is very interesting, and there's something every single day that is new. There's earnings, there's all kinds of things in the stock markets, and there's various securities that you can trade. We'll also talk about that. Don't remind me, guys, as well, so I don't forget. After we do like the broker and platforms, maybe we should have what we should do after we get a platform. What's our next step? Then it's to get familiar with your platform, develop your watch list, get a few securities on there so you can start watching. What are you most comfortable trading? What sector? So this is where I'm going to ask you guys, what are you passionate about? If you're passionate about technology, so then maybe get started with maybe 3 to 5 tech securities that you are familiar with and that you can watch on a daily basis. If you're interested in something else, if you're interested in oil and energy, for example, then maybe you can start your watch list with maybe 3 oil and energy securities that you're comfortable watching and trading. Okay, so thanks everyone for joining. Welcome everyone on Zoom. Sergio, thank you for joining. Welcome Zanetta, welcome Siobhan, thank you for joining. I hope you're having a great day too. Bruce, thank you for joining. Welcome guys. Kat, thank you for joining. Sang, welcome. Brandon, good morning, welcome, thanks for joining. Chris, welcome, thank you. All this is new for you. Yeah, you were only in Forex. It's new for most people that they've heard about the stock markets but never really got their feet wet in it. Patrick, good afternoon. Armand, Mirdita, welcome. And Tony, Hamajiza, welcome guys. Thank you guys for joining. Okay, so what I asked in the group, in our Zoom, and you guys on YouTube if you want as well, was to get it started with some stockbroker or platforms that you guys use, or you've downloaded a demo, or you're familiar with. Okay, for me, I'll get it started. I use and then we can talk about like multiple different accounts for what you're doing. So that's another thing. Once we get a platform and a broker, then we figure out what account we're trading, what style are we trading. Are we in the options market? Are we going to buy equities, straight shares of the company? Maybe have 2 separate accounts. So one is strictly for options trading where you can short companies, and then one is strictly for buying equity of the company. And that's where, unfortunately, with that account, you cannot short the companies because you just basically can buy shares. So that approach is you're buying at support levels, you're buying at demand levels, you're waiting for pullbacks, you're buying on discount. That's that style, that's that mentality when you're trading with that account. But then when you have an options account, you have the ability to go long with buying calls, and you also have the ability to short companies in bear markets. So then you can purchase puts. So that's what we'll talk about as well. Just getting started, guys. Let's just go through the news really quickly. So how is everybody doing with Forex Factory and understanding the news? Let's just do it just like we do our daily routine, and I want to make sure everybody knows what to do when we're on Forex Factory. If you're not sure about this, this is where I can, if you have any questions about this is where I'm more than happy to answer questions, and then we just move forward. Then we move to earnings, then we move to the next thing, then to the next thing. Okay, so that's what I want to do with today's call. It's kind of like a refresher. Make sure everyone is on the same page, because we're going to go into the markets next week, and we don't want to be talking about just the basics again. We want to really kind of start to dive in. So that's why I need you guys over the weekend to maybe look for a platform or broker and have a demo account already set up so that we can get started with some trading next week and some practice. Okay, so is everybody okay with Forex Factory? Do you guys understand why we go through this on a daily basis every single day before we start trading? The importance of this is because each session is identified with high impact, low impact, medium impact news, which therefore affects volatility in the markets. And you guys need to understand what is volatility in order to understand the stock market, because with volatility, it brings volume. Okay, and I know everybody on this call knows what volume is, but I'm going to take it a little bit more advanced and really break down what is volume in order flow. Okay, but so this is, I just want you guys to understand how I'm going to present in the next few weeks, few months, how I'm going to go about my education with you guys. So I want you guys to understand, number one, if you need to write this down, write it down. Because I got prepared webinars coming, but for now, if you need to jot notes, write this down. Maybe I should even write this down too, so that I remember this. When we're looking at Forex Factory, we're looking for specific high impact volatility. Okay, you can see this morning throughout London, there was a lot of red folders, and they are specified for which region they are. So we had French news, we had German news, we had all European news over here, we had British news, all red folders to do with flash manufacturing, flash services. So this is more towards if you're trading Forex, if you're trading currency, all of these are currency pairs that could affect the volatility and therefore affect the volume. So that's what we're looking to trade. We're traders, we're looking to trade volume. The more liquid a security is, the better we get filled and the better it is to execute. If there is lack of volume in the markets and lack of volatility, you're going to see sideways trading action. You've probably seen this during the Christmas days, where the markets were like closing early. There was a lack of volume. There was lack of volatility, so you see a lot of consolidation. And then when we're trading in these ranges, it can be very frustrating trading here, because you might see it's in a very tight consolidated range and you're buying and or selling and it's not really moving, and then it's coming after your stop loss, then it goes right back up to break even, then it goes a little bit up, then you add another position, and then it goes back, and then you're getting mad, and then you're getting angry with the markets, and that's that continuous cycle that the market goes through. So what we need to do is identify trending volume that is moving, where candlesticks are full body candles instead of those little spin tops and pin bars and a lot of rejection wicks and indecision. We're looking for nice full body candles so that we can start to do our analysis, where we can start to figure out where's 50% of the volume. So we can start to figure out where's our trading zone, the fair value zone, for if we're buying pullbacks, if we're shorting at supply zone. So with good volume comes good analysis. Do you guys know what I mean by that? When there's good volume, there is nice price action to start identifying critical areas. And then with that, it makes trading easier. So that's where you got to start your day. I started my day by looking at the volume today. It wasn't the greatest. I got in one trade on MicroStrategy. I can show you where I took it. It was only for $240, but I just saw the volume. It wasn't the greatest, so then I just closed out the trade, and that's enough for today. I had a great week, and I don't want to do anything silly just because I saw how the volume was trading early in the morning. If Wall Street doesn't really dictate a nice move, it's highly unlikely that we're going to get it in the afternoon, especially on a Friday. So this is part of your analysis as a trader to understand what you're trading. Don't just trade to trade. You guys have to understand this concept, and I don't know how else to stress this anymore. You have to decide if today is going to be a good day to trade the market. Some days are really bad, and you know this, and what do you guys do? You continue to trade, knowing that the volume is not good, because you keep making excuses. You make an excuse that, oh, tomorrow I have to work, tomorrow I can't trade, so today's my only day I got to trade. But if you're using that mindset, think about what you're doing. You're forcing trades in a shitty volume session because you have to trade, because tomorrow you got plans, tomorrow you gotta go to work, tomorrow, whatever it is. But that's what most traders I see are doing. They're making excuses, and they're like, Ron, I have to work tomorrow. The only day I can trade is Thursday, and that's it. But you don't need to force trades on that Thursday just because that's your only day. if it's bad volume, you need to learn the discipline that you can't trade that day. And then Friday, if you can't unfortunately trade because you got plans, that's fine. But what about next Friday? What about the next Friday, that day you can trade and it's good volume? Would you not want to trade that day where you could make money as opposed to just trading this Thursday where it's a really, really bad session and you're forcing trades? And then you're saying to me, Ron, the stock market, Forex market sucks. It's all a scam. And then I just simply say, well, why did you trade that day? We both can clearly see that it was a terrible day to be trading. Why did we force trades? It's, remember, the markets are here forever. They're not going anywhere. They're here every day, guys. Be selective with the days you're trading. I promise you, if you start with this from right now, going forward, you're going to start to see more consistency in your trading. I'm telling you, from all of the mistakes I made from day one when I started, I was that guy that was forcing the trades on Thursday, saying I can't trade tomorrow on Friday because I got plans. I was that guy. I'm using me as that example. I'm telling you, that was me, and I also get feedback from snipers that are saying that they're going through the similar situation. So I'm telling them the way how I overcame that was just learning to walk away. Like today, I've learned to walk away. I was trading. It was just in a range where it was just going 0.5% up in profit, would come back down to break even, put me down 0.5% in drawdown, come back up to break even. Again, just bouncing around, and then I just got sick of it. I'm like, this is boring. Like, I might as well just take a break even and just get out of here and go clear my head. And so very important, guys. Number one, Forex Factory, we come here on a daily basis, daily routine. We come here, we look at our prior news, and then we see whatever session we're trading. So if I know I'm trading London, I know that there's high impact. I know if I'm trading in New York, I know there's high impact. Okay, so we got to justify the volatility. Okay, very important. You guys are pretty familiar with how Forex Factory works. And this is a very basic website. This is free, basic. There's more high-end, fancy websites that give you more up-to-the-minute analysis, all types of data. Some are paid sites. Some are have more the bells and whistles and things like that. If you're looking to really, really invest in a really good news platform, check out Bloomberg. Okay, there's Bloomberg, and there's different levels. You can get a basic level, you can get the high-end level, whatever your cup of tea is. But Bloomberg does a really good job of reporting all your news. Okay, and also over the weekend, prepare yourself for the week to come. Okay, don't do this last minute. Don't do this midweek. Do this on the weekend. And that's why I dedicated today's call, because tomorrow's the weekend. So we need to prepare ourselves for next week. So this weekend, what I'll be doing is I'll be going over next week's news real briefly. So I'll go into Monday. Monday looks like a light day just looking at it right here. Tuesday, things start to pick up. We got consumer confidence report. We have in Australia, you got your inflation data coming out. Wednesday, you got our Bank of Canada. I will be watching this. Canada looks to take their interest rates down, forecasting another 0.25% drop. We've been dropping hard the last few months here in Canada. The Canadian dollar has been dropping hard as well. So they're continuing to lower these rates. Like, what is this signaling? So I will be interested on Wednesday of next week to see what happens here in my home country. You got the press conference. You have U.S. federal funds rate, FOMC, is next week. Over here, guys. So look at FOMC. This is the first FOMC of 2025. This is huge. Okay, this is with Powell. This is with the press conference. This is everything. This is where you're going to see crazy volatility. So their forecast is they're looking to hold the rates the same, no change. We'll see what they actually do. Why are they not changing the rates? Why are they not maybe following Canada and decreasing the rates? So we got to dissect all of this news. So you can see right now my brain is processing already all this information. I look at midweek Wednesday, could be a very volatile day in the markets. Maybe that's why securities right now are kind of consolidating until you might see Monday, Tuesday. You might see some choppiness. You might see some consolidation. I can already predict what the markets are going to do leading into Wednesday. And then Wednesday may, in fact, dictate how we move end of the week, Thursday, Friday, and then going into the following week. Okay, so this is your big day right there. It's sticking out at you. Wednesday, FOMC. Thursday, massive day with a lot of news. Very busy day. A lot of them are low impact. I see a lot of yellow low impact folders coming out of Europe. We do get our red North American folders, our advanced GDP, monetary policy statement, main refinancing rate, and then our every Thursday morning our unemployment rates, our unemployment claims. And then we finish off the week on a Friday, and it could be just a regular routine Friday, just like today. Could be choppy, could just be sideways. So you understand how I utilize this to see where the volatility is and to help prepare myself for trading into the next week. So right now, I already know going forward, Wednesday is a very big day in the markets next week. Okay, so that's Forex Factory, and the neat thing about this is if you don't know anything about the FOMC or whatever it is, what you can do is just click on the folders regarding whatever it is, and then it gives you a little brief description of everything over here. So if I go back to, for example, FOMC, and I don't know what this federal funds rate is or the FOMC statement. Here you have your detailed folders. Click on it, and then it gives you what it measures, what it is, how many times it's scheduled, 8 times per year, the importance of this, some notes, why traders care. You can see the historical FOMCs, what we've seen here. You can go as far back as you want to 2022. Here I can go even more, so I can see, you can see how the rates were increasing. From 2022 they were less than 2%, 2.5, 3 and a quarter, 4, 4, 5, 4.75, 5%, 5 and a quarter, 5.5 and a half. You can see that the rates were steadily increasing from 2022, 23, going into 24. They held 5.5 for multiple months, and then we started to see our decreases started to come in the end of the year, and now they're pausing. So why are they not continuing to decrease? Why are they pausing? There must be, like maybe instead of pivoting, they're stopping to see what's going on with everything before they decide to either increase or to decrease the interest rates. And it all has to do with the money supply and inflation and debts and everything like that. Okay, moving forward, earnings are very important when we're trading the stock market. Not so much in Forex. You're not too concerned about these individual corporations, so why would you be looking at these if you're trading Forex? But if we're trading the stock market, you have to utilize this in your daily routine. Otherwise, you're basically trading blind. You're just trading the markets, and if one of these big names like American Express reports at 7 a.m. Eastern and you're trading any type of security or an index, this could affect the volatility and volume within that index or security you're trading. So what I do with this, because this can be overwhelming as well, there's a lot of these. Sometimes there's 30, 40, 50, 60 corporations that have pre-market earnings. Again, I'm not focusing in on every single name. Like half of these names I don't even know who they are. I'll be honest. Like, have I ever heard of Moog Incorporated? No. Am I going to be worried about this? Is this really going to move the entire financial markets? I highly doubt it. So what I do is, to keep everything simple and basic, I always look at the big names, the names that I'm familiar with. You guys know this. Netflix reported this week. We are all familiar with that, and you saw the direct impact that had on NASDAQ. You will see other big names. You will see Nvidia. You'll see Apple. You'll see those big, magnificent 7 companies. You might see financial companies. You might see like BlackRock. You might see Fidelity. You might see Charles Schwab. You might see Bank of America. Those will affect the markets as well. Those are the biggest financial institutions in the United States. You might see big box retail stores, Home Depots, Walmarts, Costco's, all of those. And then you might see your restaurants like McDonald's. You might see Chipotle and all of those. You might see some retail consumer spending retailers that you're familiar with, Lululemon. Aritzia, that's yeah, I know these. I trade them. Lululemon, Aritzia, Foot Locker, Nike, all of these, and then you can kind of predict what's going on. Like if I'm following Bed Bath and Beyond, and I start to see that all of them are closing and they're filing for bankruptcy. Do you think I want to invest in that company and I want to go long in that company? I probably want to short the shit out of that company. So anytime you see companies going out of business, going filing for bankruptcy, that's a good time to check out the puts on Bed Bath and Beyond and maybe start shorting it with the big institutions that are shorting it as well. So we kind of got to follow what the big institutional move is, and we can also follow it. So earnings, and what you can do is you can prepare yourself ahead of time. You don't have to do it every single day, but you always have to know pre-market, there's always earnings pre-market before Wall Street opens up at 9:30. There's always after hours earnings when the market closes at 4 p.m. Some days have more than others. Some weeks have more than others. They kind of all report at the same time. So when tech is reporting, you'll see a lot of the tech corporations for that week all reporting. When the financials are reporting, all the big banks, you'll see that week is all like big banks. So and then we go through this cycle every single 3 months. That's the beauty of it. It's repetition. So when we have Apple and Netflix and Amazon and Nvidia report their earnings, I know to forecast 3 months from now, I'm going to see the same type of report. So what I want to do is maybe watch the company that I'm interested in, for example, how they perform leading into their next earnings. So if we did it with Netflix, we did it together as a team. We were thinking if Netflix is reporting this week, what did they're reporting from the previous 3 months, their last quarter. Netflix was in the news. Christmas Day, they increased their subscribers because I watch NFL, and it's going to be a big weekend this Sunday with the conference championships. Go Buffalo Bills. I hope they win. And Netflix was the only one. They reserved the rights to host the Christmas live NFL games. They also had the Mike Tyson, Jake Paul boxing. They also have now exclusive rights to World Wrestling Entertainment. They also increased subscribers on their new series that they have out, and they got 21 million subscribers that last quarter due to the new things that they're doing. What do they have planned in the pipeline going forward? Did anyone listen to the conference call from Netflix and listen to what they have in store for the future, what their plans are? So I listened to it briefly. They're looking to get more sports. So kind of those first two NFL games, that was kind of just getting their feet wet. They want to get more into NBA games. They want to get more into Major League Baseball. They want to get more into NFL, have more NFL games. They were even looking to have European football, like the English Premier, the Spanish La Liga, Serie A in Italy. Like they are looking to branch out and take over kind of like sports, with live sports and then maybe pay-per-view events as well, all of these things. So that's what they're in talks to do. So that's maybe how they're gonna start to maybe pivot and find new subscribers and continue bringing in revenue. Okay, so that's what you kind of got to look. Or if you look at a company like Apple, for example, Apple is going to have earnings coming up. You guys know more than me. If you guys have been looking at Apple, have they been in the news lately? If we go back 3 months from now, they have been in the news. They kind of decreased production in China. How are the new sales, iPhone 16? What is the demand? What is the anticipation for these? Like that's what we got to look at. And once we learn that, then we can kind of put the pieces of the puzzle together and follow Apple into their earnings, and then we decide whether they got good positive stuff, then we maybe look for the call options or buy some shares of Apple leading into the earnings because we anticipate a bullish move. Or might be bad news, it might be negative, then we look to maybe buy some puts and to short Apple on bad news. Also, this is very important. Earnings per share and revenue. So these are all the analyst estimates of going into earnings, and we see if there's a beat on earnings. We see if they actually beat the revenue. So if you've been following Nvidia, every single earnings quarter over quarter, they are always exceeding beating the revenue, by not just beating it, by crushing it. So the analysts keep setting the bar higher and higher and higher, and Nvidia keeps crushing it every single time. It's like they keep putting the bar so high because they want to see them kind of fail. Market 33 after hours. Look at Wednesday. Wednesday is FOMC. We just spoke about it, and it's a very, very busy day. We got 38 corporations pre-market, 47 after hours. Thursday, very, very busy day. Before the open, we have 67 corporations reporting before Wall Street market opens, and then we have 40 after hours. Friday is normally a lighter day, more so it's heavier in the pre-market, and then it dies off after hours. There might be 1 or 2 or 0 corporations reporting after hours on a Friday. So now, if I want to look at one of these specific days, you click on it, and I guarantee you, out of all of these corporations reporting, there's going to be a household name that we all know about. So let's just see Wednesday, FOMC Wednesday. There it is. Tesla. Look at, guys. Look at this day. This is all when Wednesday after hours. Look, so just put the pieces of the puzzle together. We got FOMC at 2 p.m. Eastern. The federal funds rate comes out. We've got 2:30 p.m. Eastern. Mr. Powell comes out with his purple tie, and he's either gonna shit on the market or he's going to pump the market. Okay, that's a given. That's Mr. Powell. Look at what we have after hours when the market closes after all of that FOMC. Look at what we have now. So what if the market drops, and we can possibly look to maybe buy Tesla on a discount, Meta Platforms, formerly known as Facebook, Microsoft Corporation, IBM. Like, these are all names that we are familiar with. What if the market keeps pumping and you have been studying Tesla and Elon Musk and how they've been doing? Maybe Tesla's going to keep driving. So is Tesla at a nice, is it at a premium area it's trading right now? Is it at a discount? How high, where is it relative to the 52-week high? All of these things. Do you understand, guys, how I kind of put things together? I just selected Wednesday because it was FOMC, and those are big names. If we look at Wednesday before the open, T-Mobile, Progressive Corporation, and you can trade these corporations individually or they're part of an index. Starbucks, okay, is Tuesday after hours. Starbucks has been in the news lately. Boeing, General Motors. So these are your defense now. So when there's war around the world, and there is, let's not pretend there's no war. There is war. Someone needs to supply the ammunition. Someone needs to supply the tanks. Someone needs to supply the aircrafts. Someone needs to supply the missiles. Someone needs to supply. There's got to be a supplier, and then there's got to be a buyer. There's obviously a demand for this type of product. And these are the household names that supply those products. It's not General Motors. Over here, Lockheed Martin, Boeing, on here might not be on this day, but General Dynamics, Raytheon, those are your defense securities, okay? And you can trade them, you can invest in those as well. We have General Motors. So this is Big Three Auto. I want to really see what General Motors and Ford are going to do under Trump, because Trump is all America, put America first. It's all making America great again. So I don't think Donald Trump is worried about Chinese auto manufacturing. I don't think he's worried about Canadian auto manufacturing. He is concerned about American auto manufacturing. Detroit, Michigan, if you guys are familiar. I love Detroit. Shout outs to Flint and Dearborn. General Motors and Ford and Chrysler, now known as Stellantis, are the big three. the American big three. Always have been since the 80s, 90s, 2000. Slowly have been, not performing as well because there's been a shift in the last 10, 20 years to electric and hybrid. And so we will see, what is Donald Trump going to do to the American auto manufacturing. So I have these three on my auto manufacturing watch list. I'm watching Ford. Day-to-day pricing is just hovering under 10 bucks. I'm watching General Motors. I would like to see what they're going to report in their earnings. They got right over here 43 billion, but more so I want to see the forward guidance. I want to listen to what they say, because I might look to trade these companies. I might look to invest in these companies. I might look to in the future have these on my watch list. Okay, Royal Caribbean cruises, we talked about this during COVID. These things took a huge hit. No one, even airlines, no one was traveling. So think about what's going on when you walk outside of the door. When you go outside in the real world, think about what is going on right now. So during COVID, did you not scratch your head and ask questions? Say, I'm locked in my house. I cannot get out. If I want to travel, I can't. Traveling obviously requires a plane. It requires an automobile. It requires, if you want to go on vacation over here, a cruise. These things were shut down. The planes were not flying. The cruises were not in the water. Crude oil took a big hit. It took sold off. Why? Because no one is driving their cars. There's no demand for oil. There's no demand for vacations. So this was a good opportunity to short these companies. Look at the put options. And then when the market recovered, these things are on discount because they've already sold off. Then when economy recovers, COVID is done, we're all dying to go on a vacation. What's the first thing we're looking at? Holy shit, let's go on the website. Let's go to Jamaica. Let's get out of here. I need a vacation. I'm sick and tired of being locked in my house. Then I'm looking to purchase these because more people are looking to go on vacation, so I can buy Air Canada, I can buy Delta Airlines on the cheap, on the discount, and then hold it for a few, whatever your trading style is. If you're a scalper, look for scalps. If you're a day trader, hold for multiple days. If you're a swing trader, hold for weeks. If you're an investor, if you bought these things from the recovery, you could be well in the money. So that's how I look at the markets, guys. Stock markets I look at what's going on in the real world. Where's there opportunities to buy? Where's there opportunities to short companies? So there's a lot you can do in here. So it all starts with these earnings of these companies, okay? So that's what I do on the weekends, believe it or not. I do my analysis, okay? So I start off with Forex Factory, our news over here. Then I go into earnings. Okay, so next week, Tesla, guys. Maybe what we'll do next week, Monday, we'll start charting Tesla. How about that? We get on there, we start charting Tesla, we look for good zones, and then we watch how it's trading into the earnings so that we can get in a habit of doing this so that this becomes very household with us at SST, that we're doing this on a daily basis and we're preparing ourselves for all of these top names going into earnings and how they trade out of earnings, okay? And then we can look to buy dips, we can look to short highs, we could look to just have fun, okay? So make sure, guys, you add this to your daily routine, okay? I'm telling you guys, it will help you a lot. So you're not blind trading the stock market. You know what's going on, okay? And then here, Yahoo Finance. If you just want today's up-to-date news, there's lots of news over here. I can see that the markets are really flat right now. The U.S. markets, S&P 500, it broke all-time highs, and right now, look at it. It's negative 0.06%. Nothing. Flat day, not moving. Dow Jones, I love the Dow. Miss Jones right over here, flat day, negative 0.1%. That's nothing. Okay, I don't even want to look at this when I see this. At Nasdaq, nothing. The Russell, nothing, just 0.25%. Crude oil. And then I look at these, my recently viewed securities. We were looking at AMD, just plus 0.35%. Netflix, we just talked about, is down negative 1% coming out of earnings, hovering close to that $1,000 marker there. MicroStrategy, I'm very familiar with this company. I trade this thing religiously. Over here, I was watching it this morning and I got out. I got in at 371, I sold at 373, and that was enough. Nvidia is moving, negative 2%. Apple, negative 0. So Ford right here, I was just talking about it, $10 a share, $10.15. And we were talking about QQQ Invesco yesterday. So that's your Qs. That's basically your NASDAQ that you can trade in the stock market. That's your tech ETF right there. Okay. And then you can get some news in here all about what's going on in the markets. Okay. Discord guys, we do forex as well with Dave and all of the snipers in Discord. We send out signals for index related securities, commodities, FX pairs, all of this. Here it was GBP USD. You got to let this thing cook a little bit. It came out at 122.50, came up, took out the highs, pulled back into fair value. If I was to mark up this wick to that wick, draw a green box across, we're hitting the top of the green box right there. I can visually see it. And then we came right back up. Look at the pullback into this abnormally large bar. That's a big, big, big candle compared to all of these other ones. Right there, automatically, I would be locating 50%. I would be getting my Fibonacci from the opening price to the closing price, drawing my zone, one static level above, one static level below, one standard deviation, draw my box, stretch it across, and you can see clearly, visually, like I don't even need to draw it. I can see the pullback was right into 50% there, draw it across, and we continue to come out. Again, this bar right here, big abnormal bar, 50%, the pullback, the wick came right in there, and let's see if it continues to drive or it might pull back down into here. But while you're deep in the money, you need to do proper risk management. From stop loss, go to break even. Once it moves out of this pivoting area, you can secure all this profit up to there. Once it moves from, it tests here and continues to move to the high, take your trailing stop loss, place it right here. And that's how you're constantly securing profit along the way. That's how you're constantly compounding your accounts and growing your account. And remember, what is this trading game a game of? I'm going to say, who was listening this week? I said it a couple times this week. Trading the markets is a game of what? And I want to see who's paying attention. This is a serious question. I don't think anyone's going to get it on this call. I'm really testing you guys right now. What did Ron say? Trading is a game of what? No, it is a game of zones. Sergio, you're right. Not the word I'm looking for. It is a game of probability. Patrick, I love it. It's not the word I'm looking for. It is a game of patience. 100% agree with you, Kat, but it's not the word I'm looking for. I'm telling you, no one is going to get it unless someone was really, really paying attention this week. Reese, trading is all about compounding. 100% agree with that. That's mathematics, but it's not the word I'm looking for. Bruce, price action is king. Price is, I'm always all about that, but that's not the word I'm looking for. Strategy, risk management. See, you guys are nailing all important stuff. Like, I'm not disputing you guys. You guys are all 100% correct. Common sense, Patrick, absolutely. Markets are all about common sense. Discipline. You guys, I'm going to say it now because I think I stumped you guys. You guys are not going to get it. Trading is a game of capital. Capital. Do you guys understand what I mean by that? Capital. Capital is how much money you have in your account, right? If we're all targeting 0.5 to 1% per day, we can all make it. Like, for example, Sergio, if you make 1%, you make one. Patrick makes 1%. Kat makes 1%. Bruce, you make 1%. I make 1%. Tony, you make 1%. We all make 1%. But the only deciding factor is who makes more, is who has more capital. Maybe Patrick has $100,000 and with his 1% he made $1,000. Maybe I have a small account, I only have $1,000 and I still made 1%. I should be proud of myself, but I didn't get the return Patrick got. I got a smaller return. I only got 1% because I'm only trading with $1,000. So do you understand that we can all be amazing traders going after the same goals, and we need to be proud of ourselves whether we have a smaller account or we have a larger account. It's just the game of capital. That's why trading is more of a long game. The more you accumulate in your account, the more you compound it. It goes from $1,000 to $2,000. You're still getting 1%, but now you're getting 1% on $2,000. Now, eventually, after let's say 3-6 months, you take that $2,000, you get it to $10,000. Now think about it. Now you're trading again with the principles you've learned of the 1%, and now, but you're getting results off the capital of $10,000. Now you're going to start to see, the bigger days coming. Now you're not making $10 a day. Now you might be making $100 a day. Then eventually, I know some of you guys are going to compound that account and get it to $100,000, and then you will have those $1,000 days. All you're doing is the same principles you did when you had a small account. You're still aiming for that 1%, but now you have more capital to deploy to the market. You can buy more units of whatever you're trading. You can buy more shares of the company. So that's what it is. It is a game of capital. So if we can continue to learn how to compound our accounts, trade management, have trailing stop losses in the market. You know how many times when I've seen myself and you guys where we go into profit and we want more and we want more, and then the market comes all the way back down to where we entered and it's break even? Think about how much money we left on the table and add it up at the end of the day, at the end of the week, at the end of the month. Add up, go back. That's why journaling is very important. This was a big eye opener for me. Was when I went back to my journal, because I wasn't journaling when I first started trading. I thought it was I was actually laughing when someone told me, Ron, do you journal? I said, journal? What the hell is a journal? Why would I journal? What's that got to do with trading? I just want to trade the markets. What do I want to journal for? He said, no, do you know how important that is? Make sure you start journaling so you can go back and look back. So when I started journaling, I started going back and looking at all my BEs, my break-even trades, and I would see that I was in profit of 1%, of 1.5, 2%, and I wanted 5%. I wanted those 10% days. I wanted that huge a breakout trade, and then it ended up coming back to my break even, and then I psychologically a break even, I'm okay with it, but I'm not okay with leaving that much money on the table. Then it started to really clue into me. Was I started to add up. That day I could have pocketed $70. That day I gave away 110 just because I didn't secure a little bit. So then I started to add up. That was could have been $500 for that entire week that I just gave back to the market. And that 500 could have helped compound my account to get it to keep growing and keep growing and keep growing. Once you get that snowball rolling, it just gets bigger and bigger and bigger. And the more capital you have in the markets, then the more position trading you can do. So listen to me. We did a call this week on adding positions. I showed you one of the trades I took on MicroStrategy. I can show it after. I added one position. I dollar cost average down another position in areas of demand, and then as it came out of there with that volume, I started to benefit from the trade 2x because I had 2 times the shares. But if you have capital, you can start to position trades. So this is where you can put a little bit in here. If it goes down a little bit, you don't need to panic if you're in drawdown. It might be coming to a higher level of demand. Then you can maybe add another position because you have the capital to do that. You can withstand this. So if you have, let's say, $10,000 and you're buying $100 right now, if you're going $10, $15 in drawdown, you don't need to panic. Maybe you add another block of $100 and accumulate more shares, and then maybe it comes back to break even, but then starts to move, and now you're in the money 2 times because you got 2 extra shares, and you're still managing your risk. You got $10,000 to trade with, so you're just putting $100 increments into the markets. So you have the ability with capital to do position trading. If you have a lack of capital, you can't really benefit from adding positions because you only have a certain amount of money. So that's what we can teach here at Stock Sniper Trading is stay focused, guys. Even if you're making small incremental gains, 0.25%, 0.5%, 1%, and you're only making dollar-wise. I hate talking about dollars because this throws everybody off. That's why I keep everything the same language. Pips if we're talking Forex, ticks if we're talking futures, points, percentage if we're talking stock market. We're not talking about dollars. We're not talking about, oh, I made $1,000 or 100 or 10,000. It's all relative to who has capital, okay? So that's what this game is. So that's why I stress the importance of trade management. If you're up 5% this week, don't go crazy this afternoon and risk it all because you want to go into the weekend and you want to double it up and you want to party this weekend. That's not the best strategy to do. a CEO of Flash in our group, he lost 1%. He walked away. First time walking away. I was so proud of him. Walked away to preserve because he was already up 5%. So he gave back one. He's still up 4%. He saw that and walked away from the market and preserved that 4% from doing anything silly. Maybe came back this week and he's back up to 6% now. So that's what we need to learn, is he preserved and protected his capital so that he can continue to grow it tomorrow, next week, and next month. Okay, if we lose and we have a constant losing, we're reading the market incorrectly, we're trading on impulse, we're over leveraging, we're revenge trading, that is the recipe for disaster that 99% of us have gone through, and we need to learn how to fix that. Okay, guys? So I know I'm talking a lot of shit here, but this is good to walk into the weekend knowing this stuff. Okay? What else we got? Over here, guys, we have informative educational blogs. It's free for everybody. Visit our website, stocksnipertrading.com, click on more, click on blog, and click on the link, and you will get part of this blog every single update we do over here. And it's on everything: technicals, fundamentals, price action, risk management, trade setups we took, news in the market, all types of stuff, everything. Okay, and it's free. So we like to give free stuff. Enjoy it, guys. If you want to take your education to the next level, okay, I'm proud, and SST is proud for the education that we offer here. And it's just going to get more and more and more, because now we're going to get started with the stock and option program. We have a lot here, guys. We've got courses, webinars, boot camps, all types of whatever level you're at. If you're a beginner, if you're an intermediate, if you're advanced, everything that we do here is all in here for you guys. Okay. If you want the education and you want you want to start to learn this on your own, lots for you guys over here. Okay, our free Telegram is pinned at the top of YouTube for you guys. You'll get all of our YouTube links. This is our trade ideas. Before, this is the GBP USD I just showed you. This is how we send out the signals, and if you let it do what it needs to do, it can eventually start to run. Not always. I'm not going to say always does it do this. Sometimes it will come back, retrace back, hit the entry point, maybe dip a little bit more, but then you got to understand what's going on below here too. Is it creating a double bottom underneath that demand level? Is it just coming down? Is it a wick out of there, scooping the liquidity, then coming back up? So we talked about this earlier this week. Guys, yesterday I took a power hour trade. I know on the call I said I was done for the day, but it was just a juicy setup I saw yesterday. This was power hour on MicroStrategy. So this was position trading. I was just talking about that. So I added one position, 100 shares under 38,000. I got a dip buy, another one, add another heavy area of demand. I added another order, 100, got filled, another just under 38,000. I added one final fill of 300 total shares. And then once it started to move out of there, I got my, again, couple percent. I was happy with that. I closed the entire trade 300, 300. There's a quantity sold. That's the total and then you just add that up and then you'll get the net. The net was just under $1,200. Okay. And that's all I was looking for, was a positional trade to get in, dollar cost average in that demand, and drive out of it with some nice green volume. And that's it. Keep trading simple, guys. Okay, so let's do what we were set to do today, is talk about brokers, and to get started with how we should navigate the stock markets. Okay, and one other thing I want to mention before we do get into that is this is an example of MicroStrategy. Okay, so this is the security I'm trading right now. So when I trade, I don't know what it is with me, but when I get in the rhythm of trading something, I follow it religiously. I follow it daily. So I know all of the psychological levels without even looking at a chart. I do this with the Dow Jones. I know Dow Jones very familiar. I do this with gold. I'm very familiar with gold. I do this with crude oil. I do this with the top securities. I can always go and look back and trade. So right now it's MicroStrategy. And here's a useful color-coded diagram here, okay? So you can see the black part of my chart over here. I'm on the 5 minutes, okay? So please pay attention here, guys, because this is very important and very simplistic that everybody can do. Okay, so are we all familiar with right here? 9:30 a.m. Eastern is Wall Street market open, okay? I hope that everybody on this call understands that. And you can see yesterday's huge green volume yesterday, okay? Right at 9:30. And this is the entire New York Wall Street trading session in this black part of the chart. And when will it end? It ends right there at 3:55, 4 p.m. Eastern, okay? So easily what I can do is I can see yesterday's high right there. See those 3 wicks? 1, 2, 3. $390.15. Do you see how easy that was? Okay, I just looked at the black chart here, saw the 3 tweezer top highs, and just put a line. Can we do that, guys? Can we do this together? Can everybody go to this chart, please? MSTR on the 5 minutes. I'll wait so everyone can get their charts. And I want to do this together because I want you guys to understand liquidity. Very, very important. Okay, can we all do this together? If you don't have access, I'll do it. Okay? So let's do this together. Okay, so we're not going to get to the brokers yet. We're going to have some fun right here. So what is this line called? Let's do something right now. What is this line called? Let's do a proper education class right here. Education 101, resistance. My man Patrick. Okay, so let's do this so that we're not playing games next week. We know what this is. So I don't have to constantly write this down. So this is resistance. Do we all understand what is resistance? I don't want to just write this down if we don't know what this means. Do we all know the basics of resistance? If you don't, we have all the education laid out for you. Support and resistance. Right here, guys. Support and resistance. Support and resistance right here. Here's your support and resistance. Bullish uptrend, bearish downtrend. All of your trending videos, resistance right here. Now, we've established resistance. Holy, you guys are quiet today. I need interaction, guys. It's a Friday. Ron needs to get pumped. Come on, we're going to start cooking here. So this is resistance. We are all good on this. Let's continue move forward. What is above resistance? What's up here? What's up here? Anybody got it? Come on, I'm gonna start. You know, in class, you know when you're in school and the teacher's like looking for students to answer questions. Everyone's like putting their head down because they don't want to answer. I'm gonna be that teacher that's gonna call you out, and I'm gonna say like, my teacher used to do that. I'm like, don't pick me. I would put my head down, and then all of a sudden he'd say, Ron, what's the answer? I'm like, I didn't even put my hand up. Why you picking me? Liquidity. Bruce, perfect. Okay, and I'm gonna make sure that all answers are correct. So we're not. You are correct if you said liquidity, Patrick. Sergio, you got it. Priority souls, price discovery. Yeah, it's discovering new prices up there, absolutely. But liquidity. Liquidity is the word I'm looking for. So what is liquidity? Liquidity is pending orders waiting to be activated. So I like to illustrate it with the dollar sign. So above there, liquidity. Did we come up there and grab that liquidity yesterday? No. Okay, is there liquidity over here? Yes. Is there liquidity over here in the future? Absolutely. Pending orders are sitting in the future. Is there liquidity over here? Yes. Is there liquidity over here? Yes. Is there liquidity over here? Yes. So we can say that there is liquidity sitting above $390 per share above resistance. Okay, very straightforward. And you can do this with any security. So you can do the same shit looking at Apple. You can do the same looking at Tesla. You can do the same looking at gold. You can do the same looking at crude oil. You can do the same with GBP USD. You just need to identify where there is resistance and there's liquidity above. Now, what type of liquidity do we have above resistance? This is where now it's going to start to get a little bit more advanced now. What type of liquidity do we have above resistance? Guys, and I have to be very, very careful with time today because I really want to go over the brokers. I have till 2 p.m. today because I have an appointment, then I got to go grab my kids from school. And I can sit here all day with you guys and go over this, but the brokers and the platforms are very important. We need to set 30 minutes aside to do that. Okay, so you guys, what is above the liquidity? What type of pending orders? We got not just buy side villain, not just buy side liquidity, we got sell side liquidity. Okay, so the way how I illustrate this is, think about it. If this is resistance, there's going to be sellers above there, right? They want to sell. If the price breaks through here, instead of selling at 390, they want to sell at 392, they want to sell at 394, they want to sell at 396, they want to sell at 398, and then they want to sell at that psychological 400. So we have sell limits. I'm going to represent them with this red line. Those are sellers waiting to get activated. So if the market comes up green, 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 breaks that resistance, it comes into the next area of resistance, and those are our sell limit orders, and hopefully the seller wants to get filled at 391, and then maybe the market starts to drop. Okay, and then they got filled above the resistance, a premium fill to sell the market. Okay, so there is multiple in the depth of market, there's multiple sell limits above. Okay, we all understand that. Next is, what if there's buyers that want to kind of like FOMO buy or want to buy the breakout price? So if it's coming up green, green, green and is breaking through there, there might not just be sellers and sellers here. There might be buyers that want to buy now 391 because they want to get filled there because they're expecting something like this. They want it to continue to make a higher high, get filled, and then continue to make new higher highs and go into the money. Okay, so we not only have sell limits up there, we've got buy limits up there. Okay, so I'm going to represent it with a green line right here to represent buy side liquidity. And if you don't understand what is going on here, feel free to say, Ron, can you explain a little bit more? Like, I do not understand this. So it's very basic, very simple. Let's not complicate this. There's buy side liquidity and there's sell side liquidity. Are we okay on that? So no matter what, if the volume breaks through here, all of these are pending orders. That green pending order will get filled. That buyer got filled. That red order right there, that's a seller. They got filled. If it continues to drive through here, it hit that pending green order. If it continues to, and then now it's just a game of who accumulated more. Was it more sellers or was it more buy side liquidity? That's why we look at delta. Delta gives you the difference. Like up here, we know that there's multiple orders. There's buy side orders, there's sell side orders. But at the end of the day, once they're all activated, the delta volume, if it's delta negative volume, if it's negative red delta, then what that's telling me is once all of these orders were activated, it's more leaning towards sell side liquidity and sellers have control. If it came through here and it showed delta positive volume, then that's telling me that after all of these transactions, the delta green volume is stronger. More buy side orders, pending orders got filled as opposed to sell side. So the green team is beating the red team. So therefore, we might continue to go higher. Okay, so very basic stuff right there. Okay, so we've got first area right there, a wick, a wick. Okay, so that's resistance. Resistance, we have liquidity above us. Okay, we can write it We can also write it in there if we want. Let me see, I haven't used my text tool in a while. So this is all. Can you guys see that? All good? Okay, liquidity. Now, do we have an area where we can place a red box to kind of display where the supply zone is? Okay, this is now where I need you guys to think where to place a red box. I'll do it for us. So what I look for is, this is my trick, okay? My edge, my strategy, whatever you guys want to call it, okay? I look at the point of interest. The point of interest are our top wicks. That's the highest point it traded during Wall Street. It came up there when 9:45 a.m. Came back down. It came up again 9:50, came back down. It came back again 10:05, got rejected and came back down. One more time, 11:15, it came up there and got rejected. So you see the wicks, the range, the wick, 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 and a wick. Now, where I chart my box right here is, I grab my rectangle, I put it at the top of those wicks because that's the highest point of resistance, and I bring it down to the bodies. Let me just make it neutral so that we can see it neutral, and then we'll determine what color of the box it is. Okay, so do you guys understand this concept right here? Because I get asked this question a million times, and everyone's like, Ron, why did you decide to put the box there? Why that size? Why? I'm explaining it to you right now. Okay, does this make sense, everyone? What I did right there. Let me zoom in. Okay, for those individuals that have bad eyes, okay, do you see what I did there? That was our resistance point. Okay, Wayne, you got this? Body, and I got that body, and I got that body. Touches, just get data touches. Data is very important, okay? And then someone will say, well, Ron, why didn't you put it at that body right there? Okay, do you see if I put it at that body there, I only get one touch, right? But if I put it down there, I get 1, 2, 3 touches. 3 is better than 1, okay? So I got 3 data points right here as opposed to 1. So that's it. That's the simple explanation. I can't explain it any more. Like everyone asks me, Ron, why? What is the secret to that? There's no secret. That's all it is. I could have placed it right there, but then I see that I'm leaving that like gap in that void right there, right there, right there, right there. Why not just drag it down right there? That's it. And that's it. No more questions. It's done. Now, what's the next thing we do is, this is representing, we're right below resistance. So it's got to, and then I see it come up green, 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 green. There's the evidence. And then it got pushed down. A seller pushed it down. It came back up green, 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 green. And a seller pushed it down hard where it closed near the low. Then it came back up one more time in here. A seller pushed it down, closed it below that box. Again, one more time. It came green, 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 green. Couldn't even take out the high. So we got a technical lower high. Sellers are lowering their offers, and they pushed it down, and that's like a statement candle. That's the FU candle that I talk about. And for all of those traders on YouTube that are using the FU candle and say they made it up, they're full of shit. I've been using the FU candle for over 20 years. I have a video where I kind of said that. So guys, I love that YouTubers are saying like pip and dip and FU, but at least don't say that you made it up, because you didn't. You're full of shit. Pip and dip is us. Pancakes is us. The fuck you candle is us. So stop that, okay? You don't want to get called out here. Just, you can say it. It's cool. I appreciate that. But don't say you made it up. We've got videos of 20 years ago where we've been saying this. Okay? So that's the big fuck you candle. Why? Because multiple times to the buyers, they said F you, F you, F you, and then they hammered it down, okay? So then that is telling me now that's supply. There's no question that that's not supply in that time. So what I do is I make this box from neutral, white, to red. Red is now very visual and telling me that anytime green volume comes back into this area, it showed me 1 time, 2 times, 3 times, 4 times. Sellers said, no, we're shutting you down. It's like Shaquille O'Neal, that analogy. If I'm driving on Shaq, he rejects me back down. I drive back on Shaq, he rejects me back down. I try one more time on Shaq, he rejects me back down. One more time, Ron is getting old. I'm almost 43 in a couple weeks. And I try one more time to dunk it on Shaq, and then he sits my ass down. And that's it. And I'm like, okay, I can't beat this guy. Shaquille O'Neal is 7'3", 300 pounds. What am I going to do? So he's rejected me. What happens if I come back at another time and I say, okay, Shaq, I got some breakfast. I got stronger. I went to the gym. I'm ready. I'm going to come in. I'm going to try and dunk on you again tomorrow. I'm going to go get some good sleep and I'm going to come. Shaq is still waiting there. He doesn't give a shit when I come. He is waiting there. So this is Shaquille O'Neal. This big red zone is Shaquille O'Neal rejecting everybody, okay? If you guys don't know who Shaquille O'Neal is, go back and watch some early 90s, 2000, go on YouTube and watch Shaq, watch some highlights. Watch some highlights of this guy, okay? No one is dunking on Shaq. So we identified the zone, we identified resistance, we identified where there's liquidity, and now we've identified supply. Okay? So these are your smart money concepts, all in one. I'm saving you guys thousands of dollars on bullshit courses right now. I'm giving it to you guys for free. The way how we do it. So this is not any smart money way. This is the way how we do it. Okay? Now, once you establish the zone, what's the next thing we do? You're right, Sergio. Drag it across and make it red. Okay? Here we go. Just bring it across. Where are we bringing it across? How far? That's it? Do we stop right there? Look at your sessions now. This is why, remember the black chart was all New York Wall Street? Let's cover the entire Wall Street trading day. Right there. That's the entire 9:30 to 4 p.m. close. Did we ever technically come up to visit Shaq up here, to visit the supply ever again? No. There's the last high right there near the end of the day, 3:20 p.m. Eastern. It tried and then they shut it down. So what I do is I don't stop with the zone. Once you identify a critical zone in the market, stretch it across. Here's now a new colored zone. What is this zone? This is now 4 p.m. after hours. This is when Wall Street closes, and then it kind of goes into 6 p.m., 7 p.m., and then 8 p.m. That's your after hours trading from 4 till 8 p.m. And after 8 p.m., your futures market starts to open up. Some of you guys are futures traders. You guys are familiar with that. The Tokyo market opens up, okay? So let's stretch this zone into after hours trading. Did we ever come back and revisit this area? No. Why should we stop there? Why don't we take it into our next zone? Our next zone now is the start of our London session, like the European session, 4 a.m. Eastern and pre-market New York trading, going all the way to 9:30 a.m. Eastern. Did we ever revisit the next day in there? No, the European session, no, pre-market. And today, here's live trading. Here's where it is, 374. Are we anywhere near this zone? No. So we now have established MicroStrategy supply zone on this date, Tuesday, January 23, all the way till now. So what happens if the buyers come up strong, and they're coming up strong, they do something like this, they come in here, pull back, holding right there, I can see support right there, holding it, coming back up, there's the volume, there's that consolidation, they come in there, they get rejected, and then one more time, they get that big push. This is now Ron trying again to slam it down on Shaq. But now Shaq is getting old. Okay? Shaq is older than me. Shaq doesn't have what he's got anymore. I picked up a lot of leg work. I've been working out. I've been exercising. I got a trampoline too. Don't tell anybody. But I put a trampoline in front of the basketball net. Okay. You see those mascots at halftime when they're running and then they jump off the trampoline and they're doing all these 360 flips and they dunk it. That's me. So there's a trampoline right here. The trampoline is the volume. It's grabbing the higher low volume, the higher low volume. So I'm getting a trampoline. Okay. And you guys know what a trampoline is? That analogy? I got a trampoline in my backyard. I can go make a video. I can go jump on it in the snow and I'll show you. But these higher low supports are like trampolines, pushing it up, pushing it up, pushing it up against why? Because we got resistance. Every time we come up, it's going back down. So we need that trampoline to continue to go back up. We come back up, they get pushed down. Finally, we get that big trampoline. Now Ron jumps off the trampoline. I jump over Shaq, jump over him, cut through this zone, take out all that liquidity. It can be buy side, it can be sell side, but we cut through it. Okay, are we all clear on that? And what happens now? Okay, holy shit, this is a good Friday analysis. But I got to land back. Okay, so I land back. You're correct, Sergio. Where do I land now? So before I land, I'm in the air. I'm flying right now. I'm jumping in the air. I don't know where I'm going to land. Okay, I haven't determined what. So now, what can happen when we cut through resistance? Okay, if this candle hasn't officially closed yet, this is an impulse break coming through here. What are the possibilities that can happen up here? What's number one? What could happen? Fake out. Okay, a fake out. Why would the market fake out right here? Come on, guys. I'm laying it out for you guys right now. It could be a trap, 100%, Patrick. A trap. Why? Because it's coming to take out the liquidity. Okay, so it could be a liquidity trap. It takes out the liquidity. Okay, so what happens if the market wants to really come down? A big supplier gets filled, so then the volume is really negative delta. Okay, so what that's telling me, when we impulsively broke through here, we cut through this kind of price discovery, this short-term price discovery. We cut through here. We made some new highs, which is great. We made new highs, but while we're taking out all these pending orders, all the transactions are getting fulfilled. So we don't know 100% that it's going to come back down and act as support. So what happens before this bar closes? And this can be a 1 minute bar. This can be a 5 minute bar. This can be 15, 30, 1 hour, 4 hour, or a daily or a weekly candle breaking resistance. Okay, we're starting to see, can Bitcoin break the 110 all-time high resistance? It's trading at 106, 107 right now going into the weekend. It's same analogy like Bitcoin right now. Is Bitcoin is trying to break through that all-time high supply, and there's pending orders above 110,000 for Bitcoin. There's guys that want to buy the high. What's his name? Michael Saylor from MicroStrategy. He's got orders in from 110, 112, 115, 120. He buys highs, he buys lows, he buys mids. He's just all about positions and accumulating as much Bitcoin as he can possibly get, because he believes that this is going to be the next big thing in the world. So he wants to accumulate as much as he can. He doesn't care what the price is. He's not a guy looking to buy on discount. He just wants to buy and accumulate. So he might have buy orders like above here representing these green lines. But then there might be a massive seller up there that it wants to get filled and sell it down. So while it's impulsively breaking out of here, a candle can have a big wick and get rejected and then come back down to reality. Okay, so now I'm in the trampoline, I'm in the air, but now it's coming back to reality. Now when Ron comes back to land, am I landing in this box? And I'm gonna get like recover in there. Or I'm gonna fall through the box and then do something like this. Okay, so this is a typical pattern all of you guys are familiar with. What is this pattern? It's got a name, household name. Head and shoulder, yeah. So that's basically your left shoulder, this move right there. That's your head. The head is your liquidity grab. The head is what peeks its head up here, grabs all the money, and then goes back down. Now, we got to see something happen at this box. It didn't stop in the box and hold in there and go back up. It actually closed below. So then who's in full control? That's telling me that that's negative delta volume. It came, cut through all those pending orders. The buyers got filled, the sellers got filled, but it looks like the delta volume is showing that the sellers won that position. They brought it all the way back down and closed it back below the supply zone. So we haven't changed the zone. And now buyers may be buying here, buying the dip, come back up because they got excited. It broke out of there, made a new high. So they want to get in now, but they got to continue to remember that this is still representing supply. So nothing has changed. So when it comes in here, what if this huge seller right here now lowers offers right there to protect his position? If he started to sell the market right here at 395, I'm sure he wants to protect his position at 390. So what was I just saying about positional trading? This is where large institutions have the capital. What did I say at the beginning of the call? It's a game of capital. Okay, so think, guys, think. I'm thinking like a banker. I'm thinking like an institution now. I'm not thinking like a retail trader. Okay, all of these fancy words, institutional trading, bank theory, bullshit, all these things, okay, they're just names to sell you fancy courses. Just think about what is going on here. It's all about positions. Why? Because they have more capital than you and I. So they can place positions wherever they want. It's just a game of accumulating more and more volume. So once they bring it down here, it comes back up, it tests the right shoulder. That's the left shoulder, head, right shoulder. This has a high probability of reversing a trend. So it's a bullish to bearish reversal. Why? Because it's testing the right shoulder. And if this has now, in fact, making the lower high, I know that they took out the liquidity. I know it's negative sell side volume. I know that they brought the offers down into the block to protect this and make the lower high. And then when we see this, now we're coming back down. So to me, that was a fake out move up there. Okay, so that's a clue. That's the clues that we got to follow. Okay, so that is option one, right? A fake out. Now, what happens if we have this? Okay, I'm going to keep this arrow, but it does this. When it comes down and then to retest this, what if there is a lot of accumulating down here? Depth of market comes all green. Like while it's breaking out, think about it. Transactions happen, pending orders are always flowing. That's what order flow is in the market, okay? Think about this. When we're breaking the high, order flow below us is flowing. It's flowing. It's flowing. So when we're breaking highs, people like me, traders like me, want to get in on discount. So it's breaking a high. I'm putting a pending order in. I want to get filled down here at 387. I'm putting an order in right here. I want to get filled at 385. I'll patiently wait. Hopefully the market will come down to me. Hopefully I did my top-down analysis and I found my fair value zone. And that's where I'm patiently waiting. That's the next process of trading, is figuring out those fair value zones. So what happens if we had this option? That it came down in here. Now it picked up these buyers, these pending orders. And when it came back up, it came up with more volume where it didn't get rejected at the right shoulder. And then it broke back up. Back in here. So now we're back above the red box. There's more pending orders up here as well because order flow is constantly moving. And then maybe we got more green lines up here, more green pending orders. There's going to be sellers as well, but it's a game of who accumulates more. So what happens if we come back up here, retest this, and then we get that move? Okay. So all I do is the only thing that's moving is volume. The only thing that is variable is the volume. What is the only thing that is static? What is the only thing that I do? I never change. I never change. This box. I never ever change this box. Why? Because I established it over here. I just stretch the box into the future. The box does not change. The size of it does not change. The only thing I change is the color of it. So if it closes below and gets rejected, the box is still red. Then we're selling. If the buyers bring it back above there, close it above, then what I do is the box is the same. I just flip it green to illustrate that there is now demand at this zone to get in here. And then we might come back and retest it, and then we're going back up to take out this high, and we're going up to $400 a share. Okay? Does that make sense? Those are your possibilities for trading at a resistance area. Okay? These are all things that can happen, and it's just a game of order flow. Who is accumulating more at these areas? Okay? So, wow. That's enough for today for the resistance. Maybe on Monday we'll start off with the opposite side, the support. I can do it right now. Okay, real quick, guys. I'll show you a trade I took this morning. Okay, and look here. What I saw was this. Okay, is that not an area to place a green box? Real simple, real simple. I can look at the different trading sessions. I can see this chart right here, no volume. I know that the black chart is Wall Street, nothing. Blue chart is after hours, nothing. It starts right there, right here. Thursday, what session? The European session, pre-market, was holding support there, right? Okay, so stretch it into the future. We came back down right there, held, back up, so it's still green. Bring it into the future. Look right there what happened. That's where I took my trade. Okay, stretch it into the future. Okay, you see how right here, what happened? Right here at 10:15, I traded this morning. I was in this trade for not even 5 minutes. I got a couple $100 and I got out because I didn't like all this choppy shit. But what did I do? What did I see here this morning? Okay, I saw Wall Street market open right there, 925, 930. Okay, I also saw Wall Street's high right here. Okay, I can see pre-market right there, right there. Look how visual this shit is. If you don't see this, guys, please start smoking weed. I encourage. If it's legal in your country, it will make you see things clearly. Do you see this right here? Do you see this? Bring it into the look at how clean it is. Can you we can't make this up. Like looking right back here. And then look how they gap it up. They gapped it up. They trampolined it over here. Okay, and then it retraced back down. It filled that gap, filled that void. This was acting as resistance. Now we got Wall Street market. Push down. Come back up. Wick and a wick. Getting rejected. Did we break above that red box yet? What's above that red box? What's above here? There's got to be pending orders. There's got to be liquidity. Liquidity. Am I going to stop with this zone? No. Look at all day we've been trading. It's trying. Maybe this afternoon. Who knows? It might come up there. We'll see. I can put an alert and wait for it at 378. But now I see it come down. It came back up, pushed down, pushed up. They were trying. And then right there, you see here at 10:15, they broke. That was a huge red candle that dropped all the way to 365, caused the low of the day. And then all those orders got filled. Okay. They took the liquidity below the green box. Do we have any liquidity below this green box? Look, there, no. Did they take it out there? No. They took it out right there. See how they just pierced through it? That's it. That thing is enough to switch the order flow in a book. Just like that. Just like that. If you can pick up on these clues, this is the hardest thing. When it's coming down red, we naturally want to sell while it's going down. It's a huge red candle. We want to sell. But look at the fake out. We sell, they come down, they pick up all the liquidity, they take out those pending orders, and then they bring it right back up and they close it as a pin bar. bullish pin bar, and then you sold down there because you were thinking it's going to drop. But the best thing to do, guys, get in the habit of just waiting for candles to close. I can tell you right now, you can clean up your trading right now, overnight. Like if you're struggling with entries, I can tell you right now, if you're listening to me, I don't know if anyone is listening. I keep saying this every single day. I don't know who's listening, who's not. If you just wait for your candle to close, I guarantee you will clean up your trading overnight. Overnight, you'll clean it up. And it doesn't matter what time frame candle you trade. It doesn't matter. If you're a 1 minute trader, wait for the 1 minute candle to close. Resist the urge of trading on an impulse unless you have conviction and you're 100% positive that everything is leading up to your intuition saying it's going to be an impulse and keep falling. Okay, there is a time and place when to do that, but don't just get in a regular habit of trading all impulse breaks. Let the market tell you exactly what's going on. Let it tell you. The way how it tells you is by letting candles properly close. You will get full confirmations. Okay, so I waited. I was itching to sell, but then I said, I'm going to wait for this candle. Okay, I'm going to wait for this candle. I wanted to see if this candle was going to close red below there. Then it would have came back up to the box. I would have made the box red, and then maybe I was going to short MicroStrategy today and come back down. Maybe the market was going to sell off today. It didn't. This big candle gave me a clue that it came down here, grabbed the liquidity, came back up, and closed right there. On this pullback, I bought this candle right there at 370. I think I got filled 10 cents below 370 right here at 1020. I got filled. I went in with 100 shares and it went right up to there for 373 and I sold it for $300. That's it. That's it. Just on this candle, because I saw that I was trading in resistance right here on the 5 minutes right there. See how the candle came right there, closed right there. It came back down, open right there. See the body? There's a touch. See this wick? This wick? So when I traded the next candle at 1020 right into there, I didn't play the woulda, shoulda, coulda game. It could have potentially broken out and got me more, but I was happy that it just filled that imbalance right up to there, and I was happy. Had I not done that, look, it would have came all the way right back down to where I entered. That would have been my probably break even. It would have potentially came back up, but look at how it's trading. Once I saw this garbage, I'm like, I'm not trading this shit anymore. Okay, so just like this, patiently waiting from Wall Street market open for about 30-45 minutes, you could literally have a positive trade every single day if you just focus on what's going on. Stop just trading the first minute of Wall Street, because sometimes they fake you out. Maybe condense this down to 15 minutes, 30 minutes. Focus on what's going on. See if there's any clues. Did they take out the high liquidity up here? What happens if they did this? This would have been the opposite angle. What happens if they opened up Wall Street? They came through here. Same opposite what they did. It's a big green candle. Trade right into that resistance right there at 381, right there where that pre-market trading was. They trade right into there. Huge candle rejection, wick, and then it closes as a shooting star red body right below there. And then retest this. I would be shorting the shoulder at 378 to bring it back down to 375, 373. So the reason why I'm saying that is these are your strike prices. When you're looking to trade options, you have 378, 379, 380, 381, you got 377. Those are your strike prices. So if I'm looking to short this move, Wall Street, I'm looking to buy a put option expiring this Friday because they're dirt cheap, because they're expiring in 2 hours and 20 minutes. So these options are dirt cheap. So for a scalper, I love this shit because I get a bigger percentage gain on the implied volatility. I can buy these options very, very cheap, and then all I need is a 5-10 minute candle just coming down, going from, if I short from 378 and it goes 377, 376, 375, just like that, your percentage goes from 1%, 5%, 10%, and you can flip contracts if you want to do this. But again, you got the scalping mindset. If it did this, if I took that 380 sell and it dropped all the way down there, holy shit, I don't even want to tell you that percentage gain that it would be. Okay, so sometimes the market gods reward you, but sometimes you got to continue to follow technicals. Okay, yes, I would have wanted a big huge green candle to come back up here and go up here and go up here, but the market, look, that's it. This is all they're allowing for trading this entire day. That's it. Here it did break, but then it came right back down. It's trying. Okay, so you guys understand that? Sorry I spent so much time on this. This had nothing to do with today's call. You see what I mean? Guys, if I don't have like a proper PowerPoint presentation, I lose focus and I kind of freestyle these sessions. I don't know if it's a good thing or if it's a bad thing, but I'm just going from day-to-day feedback from you guys. You guys are messaging me, say, Ron, I didn't, and then I go in with it. Did this help, guys, or was this a waste of time? I have to know, because if you know these concepts, guys, this is what some traders are charging thousands of dollars to teach you. And they do it in such a complicated way that even if I was trying to learn, I'm not dogging all these concepts. I don't really give a shit about them. I'm not in competition with them. I don't care. But all these market structure, change of character, market structure shifts, all this bullshit where just look at your red zone, green zone. Did the volume close below or did it get wicked out? That's it, guys. Don't make this shit complicated. I seen one guy message me with this chart, and I'm like, what the hell am I looking at? What am I reading? And he was just like, is this an institutional word? I'm like, who gives a shit about the fucking institutional word? Did the candle come down? Is there a wick on it? And did it take the volume? Did it do a hunt? Did it do a heist? Like, that's all we got to know. Stop getting too carried away with these words of these what they're called. Who gives a shit? Just understand, did they take out the liquidity or not? That's it. Did the candle close above or below? How did it close? Was it a rejection? That's it. Was it a fuck you candle or not? That's what we got to figure out. That's all, guys. Keep trading simple. That's it. Let's make trading great again. Make trading great again. Let's go with that. Okay, so what were we going to do today? We needed to do so what we did today is we did a whole webinar right here. This is resistance, okay? And now you see my blocks. So next week, I've got MicroStrategy supply to see if it ever comes up here. Now what I do is, conveniently 50% right in that red box, I'll place an alert. Look at this. So I'm already doing my forward forecast right now with you guys for next week. If MicroStrategy ever comes back, we're trading right here at 372, but if it ever comes back all the way up 390, I will get an alert and I'm ready at the supply zone to figure out what am I doing. Am I doing option 1 or am I doing option 2? I will figure it out when the volume gets there. It's not there. I found another zone right here. So let's stretch this one into the future. Is it still red? Absolutely. We're trading below it right now. So this is now lower high supply. The supplier that shorted the market over here yesterday now has lowered the supply over here. So it's making a lower high. The market is pushing down. So if it comes back up here, breaks through here, test this, we can fill this imbalance coming right back up to the 390. Okay, but don't forget that there is some structure from this red box to this red box. I can conveniently find exactly 50% of it by just eyeballing it right there, 383.46. Let's see how correct I was. Is this officially 50%? I grab my Fibonacci tool from the top of the red box to the bottom of that red box, right there. Look at, guys, Ron smoked 2 joints before this call, and look at that. Look at that white line, right dead on. 383.50 cents right there. So that's telling me that's the psychological 50% from this block to that block. Okay. Now I want to make it even more with precision. I get my rectangle. 0.5 is my point of interest. 1 notch above, 1 standard deviation above. Simple mathematics. 1 standard deviation below. There's my golden zone. Make it neutral for those of you that are new here. Neutral, stretch it across, And now you see how I have my inside zone that could start to play. So then if I'm trading from here, 378, it comes up with green volume, I know that something is going to happen up here. 382, 383. It might be resistance and they might bring it down. We might cut through here and then same situation here. So, but we do have a hidden block in the market. Have you guys ever heard of hidden blocks? Iceberg orders? Now I'm getting real advanced with you guys. Have you guys heard of icebergs in the depth of market? Oh, Ronnie's got a lot to teach you guys. Okay, there's hidden blocks in the market. Have you guys ever heard of dark pools? Dark pools? Not the movie. Dark pools? They're hidden blocks in the market that, okay, I'm going to break it down real quick, guys. Please pay attention to this. Okay. What are hidden orders in the market is when a huge institutional player, pay attention guys, huge institutional player wants to get filled but not spook the market. Do you guys understand what I mean? So if a seller like wants to really sell the market, like up here, then maybe they'll come in here with hidden orders to sell, to fill sell limits here. And then when it comes up here, they've got enough volume that they can drop it. So they're hidden orders because they don't want to just maybe drop the market right here. If it comes up and then they get filled and they don't want to spook the market and scare, you know, like scare, and then below like pending orders get removed and you kind of scare the market. So it's kind of like when you're fishing. You know, when you're fishing, you got your bobber, you got your worm, the water's quiet, the fish are all there, they're biting. But if I was to go, like I went fishing with my son and I told him, don't throw a rock in the water. Why? He loves throwing rocks in the water. I'm trying to fish. And he threw a rock right in the water, right where my bobber was, and all the fish went crazy. They got scared. So that's what kind of hidden orders are in the market. They place orders kind of to bait, like a worm, bait traders in biting so that they can slowly start to fill their orders so that they don't throw like a rock in the water and scare the market and right away then they scare me and you and then we're not biting anymore. So that's what they need. They need the bites, okay? So I will explain that more in a professional PowerPoint presentation when we start to get in order flow. But think of fishing, okay? I know some of you guys love fishing. I'm going ice fishing this weekend. Minus 25 degrees. I'll be in a hut. It's a heated hut. It's got a fireplace in there. Like this thing is decked out. It's going to be freezing cold where I'm going, but there's lake trout, there's northern pike, pickerel, perch. So hopefully we get some bites this weekend. But this is where we might see a hidden block. Hidden by whom, you say? By an institution, by a market maker, by a big player that wants to get filled. Who are household names, Amanda? BlackRock, Fidelity, State Street, Vanguard. Those are like your big institutional players in the market, so they maybe want to get filled. With Bitcoin right now, there might be multiple hidden orders accumulating Bitcoin right now, you know, like, so these are kind of those hidden orders, okay? Again, has nothing to do with today's session, but the markets are endless for education and knowledge, okay? So now that I identified that zone, that's it. Just stretch it across. Now, if I'm doing zone-to-zone trading, I can trade from this zone to that zone. If it goes from this zone to that zone, this might be a consolidating area. And then I look in the past. You can always backtest your own analysis, bring it in the past, and see what the market tells you. So you see when it was trading in here, majority of the volume was trading in this block right here. You see? And then finally it broke down and started to drop. So, but you see how most of the majority of the volume, if I keep going to the left of the chart, you see there's a fake out. The candle closed above, but then they gapped it down and then they brought it right back down. So that to me was a fake out. And you see how these zones can continue to play into the future and in the past. If I continue to bring it back, you can see when the volume was above, this was a green box. It came in that box, it was green. and went right back above there. It came in here and did a inverted head and shoulder. There's your left shoulder, inverted head, right shoulder, and then there's your bearish to bullish reversal out of the zone. This is where volume closes below the zone, and we push down, and then it comes back up to retrace, and now it's a red block pushing the market down. Okay, so you can trade basically from block to block, from zone to zone, and figure out what's going on in these zones. So once we've established them, I can stretch these out all next week. I don't even need to do an analysis next week, because I know MicroStrategy will be trading either below here, it will be trading inside here, might be making an attempt to come up here, maybe it's coming up here. So that's it. Those are the only possibilities where the volume can move. I've kind of trapped everything in these zones. So the only thing that's moving is the volume variable. So I can place now an alert right up here. So again, I place a line 50%. I always go with 50% because the midpoint is the best. And then right click it, add an alert. So I'm alerting myself next week. I'm already preparing myself for next week's trades. Getting ready. Preparation is key. You fail to prepare, prepare to fail in the markets. If you do your homework, if you do your analysis, you are ready. You're excited to get into the markets and test out your zones. But be patient and disciplined at each of these zones, because you might get fake outs. You might get confirmations. Like the market could come back down, close below. We flip this red, comes back down. Maybe it does something like this and then starts dropping. Then I know that it's consolidating below the supply zone. And then we get a bearish flag pattern. The rally is coming down, and then it flags, it consolidates, it's accumulating. Sell side volume is accumulating more so that they can drop it through here. Okay, that's it, guys. Keep trading very simplistic and have fun with this. But I have prepared PowerPoint presentations, professional style, guys. This is kind of me just talking here, but it's good. It's good. It's real talk, and hopefully it helps, guys. But now let's just get in the last 20 minutes of what we need to do here. So a lot of you guys mentioned about stock market. You're excited about it. Ron, where do I get started? What platform, what broker should I? So I'm just going to make we're going to go through the list. So let's just start off with number one, the one I use. Okay. So I'm in Canada. I bank with TD Bank. Like I have my checking account there. If I need to go take out money, I have the bank machine. It's my local bank, and I've had them all of my life. So I have my trading accounts with my banking institution. TD Bank in Canada and TD Ameritrade in the US. They have an advanced dashboard if you want depth of market. You can use their platform. I really don't like their platform, to be honest. I don't like trading off of it. I've said this years ago. It's very prehistoric. I don't know if you guys were trading with me 5, 10, 20 years ago, but I absolutely hate the platform. Sorry, TD, for saying this, but it's so not user friendly. It's like you're working in a bank, to tell you the truth, when you start to use the indicators and shit like that. So that's why I prefer charting on TradingView. It's easy on the eyes. It's very easy. It's good for educating, but I trade off of that. So number one, you can use your financial institution. If you're in Canada, there's TD Bank, CIBC, Bank of Montreal, Bank of Nova Scotia, and Royal Bank of Canada. Okay, so those are your big Canadian banks. In the US, you have your big banks you can probably trade with. Okay, you guys have like HSBC and Bank of America and things like that. But let's go talk about more platform-wise platforms. So there is this one right here. This one, in my opinion, is probably the most popular one. They have low commissions, very, very low commissions. Like some commissions are 50 cents, 99 cents. Very, very competitive. I have nothing but good things to say about this broker. I haven't really heard anything negative. Fills are on time. You can do option trading. You can do investing. You can do, if you're working in the US, you can put your Roth IRA, and you can trade with that account. You can open up a savings account. You can do tax-free accounts depending on what country you live in. But this is a good one to get started. If everyone can maybe look at interactive brokers this weekend, check it out. Come over here. Like why? Like go through the website. Why do you want to use this? Everything is here. You can review their platform. It's advanced on mobile, web, and desktop. A broker you can trust. It's NASDAQ listed. Like this is a publicly traded company on NASDAQ. They just had their earnings this week. Okay, so you can invest in this broker if you like. So it's got all the awards. It is legit. It is regulated by CIRO. So it's a Canadian investment regulatory organization here in Canada and in the North America. So this is probably one I would get started checking this one out. They got education, they got services, trading, pricing. You can open up a demo account. This is what I tell everybody. I don't care if you've been trading for 100 years in the markets and this is your first time coming to this, open up a demo account because it might be completely different from what you were using in the past. Okay, so you can look at pricing, commissions, margin rates, interest rates, short sell costs. We'll talk all about this stuff, but commissions are important when you're trading. So look at the commissions. There's tiered if you're trading stocks and ETFs. Basically, very no transaction fees for ETFs. So QQQ is an ETF, so that's what we want to kind of trade. If you're trading NASDAQ 100, you want to trade QQQ, and look, there's no commissions. Okay, so it's very similar to trading in Forex indices. You can get fixed or tiered. Option trading, there's from anywhere from 15 cents to 65 cents per contract is their rate right now. Okay, so you see some of my commissions are $9.99. I'm paying $10. I could pay 65 cents here. Maybe I'll make a switch. Maybe I'll open up this account and I'll trade with this one with you guys as well. But futures trading, commissions 25 cents to 85 cents. Spot currencies, so spot currencies you can trade. Bonds, we can do bonds. So those are your commissions. Okay, commissions eat away at your profits. So if you have a small account, if you only have $100, $200, I don't recommend you trading with a broker that's charging you $5, $10 for commissions, because that two-way road, if you're getting charged, like me, I'm getting charged 10 to buy, 10 to sell, it costs me $20 just to buy and sell. Whether I make money or I lose money or I'm break even, I lose $20 on the transaction. So if I'm just trading with a $100, $200 account, I cannot afford to lose $20 in commission. I'm basically depleting my entire account. So I'm trading with a larger account. So I don't mind the $10, $20 because I want instantaneous fills. I don't want any games to be played. I don't want something to happen while I'm scalping the markets with a little bit more volume. Okay, so this is interactive brokers. Check out a demo account. Check out the platform. Open up the platform and see if you like it. And you can, platforms are very similar. If you don't like the white background, you can do black background. If you don't like the green and red candles, change them to purple and yellow. Do whatever you need to do. Check out for your indicators. Every platform has your common indicators. If you're comfortable with RSI, your EMAs, your MACDs, it's got a Fibonacci tools. Everything we do on TradingView is available on these platforms. It just might be presented in a different manner. Okay, so number one, interactive brokers, check them out. Number two, Questrade. This one also is available. Again, I don't know, depending on where you live, whether it's allowed in your country or not. But I'm just showing you what's out there. The rest is for you to do. Okay, so Questrade is another good one. Okay, I'm showing you kind of regulated brokers. These are not unregulated like Forex brokers that can open and close tomorrow and or play games with your fills and slippage and all that bullshit, or telling you cannot trade news, you can't trade FOMC, none of that. These are professional platforms that allow trading when the markets are open, and pre-market and after hours trading as well. Okay, so check out Questrade. If you guys want, write these down. So there was interactive brokers, Questrade. This is another one, Wealth Simple. Okay, so Wealth Simple allows for stock and options, allows for crypto, allows for everything. Over here, again, get started. see what it is, open up a demo account. This is a Canadian, like I'm showing some that are Canadian here, because I'm in Canada. I'm familiar with the Canadian platforms. Another one is this one everybody pretty much has heard of, Robinhood. Okay, so Robinhood has had its pros and cons. We can discuss this. Back in COVID, during the pumps of AMC, GameStop, Bed Bath and Beyond, and things like that, a lot of traders got caught in the trades, whether they wanted to close in profit or wanted to close and draw down or just get out of the trade. This platform did not allow those traders to get out for multiple days. It just froze. And like, think about that, guys. If you're in profit right now and you want to get out of the trade, and then the platform just shuts down and then doesn't allow you for the next day, the next day, the next day, and guess what? The market is still trading. So the market dumped on them. So when they were in profit, this platform closed and didn't allow for trading. And then when it officially opened up, the market dumped, and then they were at a loss. So to me, that's not very professional. I just, a principle, like a trading platform should not do that. That's bullshit. I would be going fucking crazy if that happened to me. Okay, so a lot of people went crazy, and they said that they fixed it. It was a glitch and all the the bullshit talk, and they said that they've corrected it. So this one is on you. If you want to open up Robinhood, I know a lot of traders that use it. Maybe they fixed their issues. I haven't heard of anything since then. So, maybe they did have a glitch. Who knows what it was? Maybe they didn't have the platform to handle that amount of volatility that happened at that time. So maybe they've fixed those issues. They've corrected them. Like, I understand technology and things like that's not perfect. So I'm not going to just say that this is a shitty platform. I'm going to give them the benefit of doubt that they learned from their mistake. They fixed it. But you guys just have to be aware, and just be aware, knowing that had happened. Maybe it could happen in the future. I'm not willing to open this platform to gamble on that, because I know that there's other platforms available. Okay, but there is this option. This one is available for US and global, so Robinhood might be a choice for you. Okay, and then we have also Webull. Webull is also a pretty good one here too. I used to use this one a while back. Its platform is very, very similar to TradingView. Very, very similar. You'll see a lot of platforms are very similar to TradingView. They've kind of copied the concept and kept it very, very similar. So nothing really changed. Here you got full order book depth, so you can see the order flow. You can see the order book. You can track order flows. So there's a different type of analysis, level 2, level 3 analysis that we can have with a lot of these platforms. Okay, guys, they have your traditional candlesticks, they got your mountain charts, they got whatever you want, all on here. Ethren, also with Interactive Brokers, you can obtain TradingView subscription up to 1 year for signing up for an account. Amazing, guys, listen to that. So Ethren just said, with Interactive Brokers, you can obtain TradingView subscription up to 1 year for signing up for an account. So that's a bonus. That's awesome. Thank you, Ethren. I didn't know that. Biggest lag, when my son threw the rock, did you ever have a feeling to place a sell order on your kid? No, but I felt like throwing him in the water. We were fishing all day for 2-3 hours, and then he did that. He spoofed all the fish, and then I was about to throw him in the water too. But no, I didn't do that. I'm just joking. Okay, guys. So do you guys have any other platforms maybe you want to mention? I'm gonna just see if I missed any. Let me see. Okay, there's Charles Schwab, if you want to check them out. Fidelity Investments, you can check them out. E-Trade, there's E-Trade. If you guys want to continue, if you want to write these down, see, in Canada, we got CIBC's Investors Edge. We have TD Advance, Ameritrade, eToro. There's eToro. TD Ameritrade, I said. Vanguard. That's pretty much the top names I would work with right now. I wouldn't go with any other names. So, but the main one is this one for everybody. I would recommend. And I'm not affiliated with any of these brokers. I don't really care, but I'm just telling you which one might be the best for everybody. And then you can see that you can do stocks, ETFs, warrants, and certificates. We can do options, futures, spot currencies, and bonds. So stocks over here, if you click on it, again, it shows you everything here, your commissions. So these are where we can open United States, Canada, Mexico. Got your countries here. Hopefully your countries are also on here as well. Okay, and options. Again, it breaks it down. Cost per contracts. Okay, so what I would, oh, Mumu, yeah, Mumu, I forgot, Mumu, there is Mumu as well. Mumu, I've never traded with this. I've heard a lot about it. I've heard good things about it. Has anyone ever traded with Mumu? This one right here. Okay, so I haven't personally traded with this, but I've heard a lot about it. I've heard that when you sign up, you do get cash back. I think over here, 50% cash back. Deposit $100, get up to $50. Some of these platforms, when you sign up, they'll give you some free money to buy some shares. 10, 20, 30, 40, $50, and then you can purchase your first share. But Mumu's here too. I don't know too much about it. I've heard some things about it. So another thing, guys, if you don't know, if you live in Canada and the US, in Canada we have RRSP, Retired Savings Plan, your retired plans, and you have a tax-free savings account. In the US, you have a Roth IRA. You can trade with these accounts. So if you have a retirement account, you can deposit money in there and you can trade that money up until your retirement and start drawing off of it. So we also have tax-free savings account. These ones are amazing because you can deposit money in here, and if you keep compounding that account and keep growing it, everything is tax-free in there. So that is unbelievable here. Because everything is all about taxes, and we have a break here with a tax-free savings account. There's also cash and margin accounts. Okay, this is a little bit more advanced stuff over here, but most brokers and banks allow you a cash or margin account. So I will explain what this is. This is more advanced. You need to really be an experienced trader in order to trade a cash or margin account. Some of you guys are familiar with margin accounts with Forex, the leverage you have, but we can also do this in the stock markets. But it's a double-edged sword. If you don't know what you're doing, have you ever heard of a margin call back in the day where the bank calls you? You get a margin call. So you're trading on margin. You're trading on funds that you do not have. So the bank is calling you and asking, hey, when are we getting our money that you just lost? Okay, so but there is those options available. Okay, but for me, guys, this is to wrap up the week. Think about this weekend, guys, about a broker, about a platform. What I would also recommend is starting off your watch list over here. Start to put in some names like QQQ, maybe AMD. We talked about Netflix this week. We're talking about MicroStrategy. We'll talk about Apple. We'll talk about Tesla. Absolutely. Add Tesla to your watch list for next week. NVIDIA, Intel, Amazon, Google. Like these are names that Microsoft, NEO is like the Chinese Tesla over here. AMC, you guys know all about that. Like add to your watch list a few securities. But what I would do is add securities that you already know something about. Okay, don't just add a security that you have no idea. Start off as if you're beginning something you're comfortable with. I believe we're all comfortable with Apple. okay, or Tesla. Those are household names. You know what they do, okay? We don't need to like go into the entire history of Apple. You know that they make iPhones and computers and tablets and all of those things, okay? So it's pretty much a household name you should know. That's where I would get started. Start off with some securities that you're comfortable researching, you're comfortable watching on a day-to-day basis, because those might be the securities that you're trading. Don't overcomplicate it. Start it off easy at the beginning, okay? Less is more. So then that you can follow price action. Like for me, I'm not trading anything more right now than MicroStrategy. Someone asked me the other day, Ron, why don't you trade something else? And I want to give my honest answer, but I don't want to sound arrogant or cocky or anything like that. So I'm just talking the truth here, guys. I started trading this like in November, and I haven't had a losing day since then. So I'm being completely honest. I'm not doing it to sound arrogant, but I'm just looking for 0.5 to 1%. I'm not looking to make 10%. I'm not looking to make 20. I'm just looking for a modest 0.5%. If I get that, I go to break even, and sometimes I'm getting 1.5, 2%, and I'm continuing to compound this account with just trading this. And I'm getting every single day, I'm watching the levels. I'm highlighting the levels. I'm watching how it's moving. It's moving in tandem with Bitcoin. Bitcoin is volatile right now. Everything, why November? Why did I choose November to start trading this? Was because we had the elections. We had the December going in. Now we got January. Now we got Trump in office. So I've been following the volatility leading into the elections and where we are today. I'm going to continue trading this. I can obviously trade something else, but I want to continue the momentum. I'm comfortable trading this, and I'm on a little bit of a winning streak. So I'm doing okay with this. And that's for you guys too. If you guys pick a security and you're doing really well at it, why change it up? Why all of a sudden, if you got 3 straight trading days where you're profitable, why do you got to go trade another security? Just continue following what's working for you. Don't change it up. I'm a person that doesn't change things up. I keep everything consistent. I keep everything routine. I don't deviate, and I don't do things that I shouldn't be doing. Why Mr. instead of IBIT? Because I prefer the volatility of this. IBIT is more of a ETF, and I don't like how it moves. I don't like the volatility. It doesn't really again, I'm a scalper, so I like volatility. I like to get in and out in 5-10 minutes and get my daily goal, and that's it. This allows me the opportunity to do this. And again, the question is, a big is lot. Why change something that's working for something else? I just explained to you. Why do I have to look at a different security when something is working? I don't understand that concept. Why everybody always has to move and deviate from what's working, and then they struggle with something new, and then they come back to this security, and they have difficulty readjusting and things like that. But guys, that's it for me. I'm going to be finished for the week. I got to go do a few things and then go pick up the kids from school. Big weekend ahead for NFL, guys. Big games, Final Four, AFC Championship, NFC Championship Sunday. Monday, everything will be back to normal. Dave will be back. I will be back. We will be doing more stock market trading next week. Hopefully you guys have a platform to chart with and do some demo trading, and then we can go from there, guys. So I just hope that you had fun this week. I hope that you guys learned something new. I hope that you guys are excited for something new here at SST. To introduce the stock and options market to you guys, and continue growing your accounts, guys. So you can trade, one day you can trade stock market if you like the stock market volume. One day you can go back to your Forex, you can trade your gold. Another day you can maybe look at options. So you can have multiple accounts. That's the beauty of trading. You can have multiple accounts. I have multiple accounts. I have one account that I just go long in, long investment account. I have an account where I day trade stock market. I have an account where I just short companies. That's through options. So I have a speculating account where if there's growth securities that have upside potential, I buy in on those and I hold them. If I believe in what the future holds for them. So you can have this too, guys. You don't have to have just one account, that's it. You can have multiple accounts, and each account has its own specific purpose. Okay, guys. But let's all have a great afternoon. Enjoy your weekend. Don't get consumed too much this weekend with the charts and analysis, just a little bit, maybe 30 minutes, 1 hour. But do some research about a platform is most important thing, and get your watch list started. And then just do some charting, maybe do a top-down analysis on one of your securities of choice, just so you have some specific levels for trading it next week. So if you choose Tesla has earnings coming up next week. Maybe right now start off with a nice top-down analysis. If you're not familiar with how Tesla has been trading the last few months, last few years, just briefly go to the monthly, check out how it's been trading on the monthly. You can go into the weekly, then bring it down into the daily. So here's Tesla. If we go start off on the monthly, okay, let's get rid of those rockets over there. And another thing here, see on the bottom here, so you can see E stands for earnings. So I can see how the volume traded on this earnings. Here was earnings. It was a really good earnings. See how it dipped on the monthly all the way to their next earnings, and then look at Tesla was $100 back here, January of 2023 to start the new year, and that was a great opportunity. So they had earnings, bring it right back up, pulled back. See how all the earnings kind of came down, created that higher low wick on that earnings. So here's our next earnings right over here. So this is how we're trading. We're trading near the highs right now, leading into this next earnings. So if I'm already looking at kind of structure on the monthly, I can see like that wick and those bodies. Remember what we were doing when we started the call here, Wayne, when we did this, and then we stretch it into the future. Look at the volume. We're right inside that zone right now. So we did this month break out to 445 up there. It came back. We're right here. Will it close above this box? We've got some wick fills over here, or will it come back down? Does this look like it might be developing like a double top leading into earnings, where it came up right there? Kind of our neckline is down here. It's coming back up. Will we come back down? So maybe is Tesla going to have good news or bad news? Will it retrace? Will it go back up? But that's just starting on the monthly. Like that's a larger time frame to be trading. Going to your weekly. You can see how now it's just came up green, back down red, came up green, coming back down red. Again, developing something around this block. We'll see. Will it push down or will it bounce back up here? You can go if you want to trade this thing on the daily. This is how it looks on the daily. And remember, there's gaps in the markets and things like that due to after hours trading. And some platforms show you gaps, some don't. Some show you the full volume. But guys, let's have some fun next week. It's FOMC. We'll do live FOMC. We'll do stock market and options analysis and education and trading next week. So let's have some fun next week. Have a good weekend. Enjoy yourselves. And thanks everyone for joining me this week. It was awesome. I appreciate all of you guys. And if you want to join the Stock Sniper team, we would love to have you guys on this team and trade with all of us in the private Zoom, in Discord, with all of the amazing members, and take your trading to the next level, guys. So it's not just me. We've got Dave here. We have amazing guys in our Discord. Forex, over here, guys, Forex. Make sure you guys check out Rob Mack. He's every single day he's in Forex, and he's posting some unbelievable charts over here in Forex. And Borex is in here. He's doing a little bit of Forex lately. But like, look at the levels, guys. Everyone talking in here, sharing the charts, working as a team. Scotty, shout outs to Scotty as well. What he does for index. Here's Rob Mack. Like, look at these charts. Like, unbelievable here. Coming up here, shorting it back down, showing what, and then in the order block, consolidating, coming back up, showing the potential profit, the pip wise, percentage wise of up here. So unbelievable work from all snipers here. So shout outs to Rob Mack in the Forex group every single day in here. Shout outs to Borex helping out the team with gold and Forex, and Scotty and indices, and everybody else, guys. I encourage you guys to get more involved in sharing your charts. Stop being so shy. Talk with others. And like, look at all these. These are all profitable trades, guys. Unbelievable. And this is not by me. This is by you guys. So just continue, guys. Doing what you're doing. We had one with Bernard last night. It was an unbelievable trade. Was it gold? It was gold. I believe it was gold. Just want to. His execution was flawless. Yeah, this. Look at this. It came right to him, to his zone down here. And there's the wick taking out the liquidity, and then the volume above and retesting, and there it goes, takes out the resistance, breaks out, so that's that breakout. But then when it pulls back, it's retesting the zone, holding the support, then it gets that trampoline, it gets that push, and there it goes, breaking through there. So that was from 27.44 to 27.74. That's a $30 move on gold. That's 300 pips. That's an unbelievable trade. Like, well done, Bernard. Like, amazing. I can go on and on about all the snipers in here, but we don't have enough time for that. So just want to say congratulations to those of you guys that are really, really now learning the art of trading, really respecting your risk management, respecting daily goals, respecting daily losses. If you lose 0.5%, 1%, realizing that it's a mature thing to do, to walk away from the markets and not do anything that will make the problem worse. Just walk away, know that tomorrow is another fresh day in the markets, and you can recover that with a fresh mind and start off again. Don't stop revenge trading, stop over leveraging. Those days should be over, guys. Like, you should be now sick and tired of losing in the markets by just over leveraging, over trading, not following any plan, discipline, routine. If you're still doing that after years and years and years, you're going to have to make an adjustment sometime. Otherwise, you're making this bad habit just keep going on and on and on and on. And the only thing it's doing at the end of the day is it's costing you money. You're losing time. Okay? So time and money is like, those are things that we do in the market. We want to utilize our time efficiently in the market so that we can make some money and get out and go back in the next day, utilize our time, but allow the trade to come to you naturally. If you feel like you're forcing a trade, I would recommend you don't even take the trade. If it feels forced, it doesn't feel natural, you're probably going to lose, or you're going to get stopped out, break even, or something will happen. If it's a natural move, like it was at the highs and now it's naturally coming down to an area of demand, you look at your indicator, it is getting kind of oversold, you start to see they're taking out the liquidity below the demand zone, then you probably look like you're at a good opportunity to maybe initiate a buy, as opposed to buying a breakout above resistance and buy the high. Okay, so work on those things, guys. Captain Boom, it's been an excellent set of sessions this week. Have a good weekend. Perfect, Boom. I'm excited. Also, for the lifetimers in the group, we have a session Sunday, 10 a.m. Eastern. I'm looking forward to that call with you guys. We'll go from 10 till about 11:30 because then we got to prepare for our football Sunday. But I will see all of you guys, lifetimers, Sunday morning, and I will see all of you guys on YouTube and everyone else. I will see you guys Monday. We'll get started Monday morning in the stock markets. Okay, guys? So big week ahead. FOMC, a lot of big name earnings, so it should be a fun week next week. Let's see what these markets have for us this week coming. Okay, have a good day, guys. God bless. Enjoy your weekend, and thanks for joining me. I appreciate it. If you guys can hit the likes, subscribes, notifications, all of that, join the team. We'd love to have you guys. Have a good weekend.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.